Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Midweek Takeaway. Today we're joined by Ben Clube, CEO of EnergyPathways. Welcome back, Ben.
Hi there, good to be back.
So EnergyPathways has secured a £5.1 million green loan facility from Global Green Asset Financing, GGAF, for its Marram Energy Storage Hub MESH project, a large-scale natural gas and green hydrogen storage facility. The loan will fund the project through the FEED phase, targeting FID, final investment decision, by the end of 2025. The facility offers flexible, minimally dilutive financing with interest at 12.5% annually and repayment options. MESH is located off the Lancashire coast, will initially store 15 terawatt hours of energy with plans to triple its capacity. EnergyPathways aims to strengthen its leading position in the UK energy storage sector. So could you tell us more about how this funding will be used, specifically for the FEED phase, and what it means for the project's development, please, Ben?
Yeah, so this funding is to support the MESH project's progress towards FID, which we're targeting for the end of 2025, and it'll cover the array of studies and work streams going with FEED, working with our strategic partnership group, who are a number of top-tier companies, and through that we'll be finalising the facilities design and the storage production profiles, withdrawal rates, injection rates, to get us to a well-defined storage facility project.
Okay, I mean, that sounds really positive news, Ben. But so with that FEED phase now funded, what are the next key milestones for the MESH project? I assume that, you'll be looking at a timeline and aiming to reach a final investment decision by the end of 2025, presumably?
Look, there's an array of milestones coming up for the project, and what we need to do is, with that, those are some announcements with respect to our Tier 1 strategic partnership groups as we bring those partnerships into fruition. It'll also be announcements in relation to offtake arrangements for the storage capacity within the project, and offtake of gas production. And also we'll be looking at announcements with respect to the renewable power connection that we'll be having with the wind farms in the region as well. There'll also be updates on the storage licensing process that we're progressing, and also our progress towards hydrogen production and storage.
So Ben, cracking deal, I have to say. We haven't seen as good a deal as this on the market for quite a while, I think. So congratulations. I think to get funding in this way is obviously very beneficial for the company and obviously the shareholders involved in the project.
Yeah, look, that's right. I think we're very pleased with this financing arrangement for our shareholders. It's effectively a non-dilutive financing structure, and that was something that we wanted to achieve. I think our ability to achieve this sort of financing arrangement for the company and for our shareholders is due to the approach that we're taking in the energy transition space, and we're able to attract clean tech financing type structures, and we've seen a fair amount of interest in what we're doing. So, we appeal to the clean tech and green financing space, and we're having other discussions in relation to that. So, and we've had quite a lot of interest, so we're very pleased.
Very good. So how it will work, you will draw down money in Q4 of this year, and then subsequently, when is the warrant side of things? Because obviously that means they're also going to have to pay for their shareholdings with the warrants. Can you explain how that will work?
Yeah, so, well, firstly, in terms of the drawdown, so this facility goes up to a maximum of £5.1 million. We are able to draw down on that by notice, and when we wish to draw down. So it's a very flexible facility, and furthermore, we have the ability to early prepay without cost. So it's a very flexible facility for us. With respect to the warrants, we had a mind to making sure that it was well structured for our shareholders. And the way the warrants work is that the warrants effectively vest at the maturity date. So that is it's a 3-year loan, so 3 years from the first drawdown, and the warrant pricing is calculated based on the VWAP at the maturity date, and 20% discount to the share price at that time. Now, with it being structured with a 3-year vesting in effect, what we're looking at then is that we would expect to be in production with the mesh project, and we'd be expecting a considerable markup on the share price by that point in time.
Yeah, I mean, it protects the shareholders for that period of time, and also they're going to have to pay for them as well, obviously, because of their warrants. So, yeah, it seems like it's a good deal. Tell people how you're going to use this gas storage, because obviously to use the gas storage, you've got to pump out the original gas. Would that be correct?
Yeah, that's right. So what we're doing is we're developing mesh as a storage facility that involves drilling wells, putting in offshore facilities and also onshore facilities to run the storage operations. But what's neat about this is that storage facility is basically full of gas from day one. And in order to create some storage capacity, we'll deplete some of that initial gas that is in place. And once depleted, we'll then transition those facilities already set up to deliver or provide storage services to providers of natural gas into the UK retail market.
Very good. So, point of view of this loan, if all goes to plan, and obviously this is what you're trying to do, by the end of 2025, you're going to have sort of a decision to do things. There's the final investment decision. I think you mentioned the FID. So that when that final investment decision happens, and assuming it's a yes, at that point, or from that point, in terms of raising the funds and moving forward, how long are we talking about? Is it a pretty quick process, or how long is a piece of string?
Yeah, so the FID milestone at the end of 25, we're then looking to be into use from the mesh project at the end of 2027, but lining up to that FID milestone, because we're developing an energy infrastructure asset, we'll be seeking, and we're making progress on the development financing for that development. But being it can be geared up. So again, a well leveraged investment for our shareholders.
So that means that if that happens and your final investment decision comes good, then you think that in all probability you'll be able to pay back whatever you have borrowed in this 5.1 million.
That's right. And as I said before, it's a very flexible facility that we've arranged here. So we've got opportunity or options here to prepay or pay down that facility at a timing when alternative financing can be secured with a mature FID project.
Let's, for the sake of argument, say there's £1 million drawn down. Do you have to pay the interest on that on a monthly basis then at your sort of 1% or just over 1% per month?
Yeah, so interest is calculated at 12.5% per annum, and it's paid in cash on a monthly basis based on the net drawn down amount.
Very good. So, I mean, basically this frees you up to go ahead and do what you wanted to do all along, which sounds fantastic.
Yeah, absolutely. So we're really gearing up now. We're completing our pre-FEED works by the end of this calendar year. We move into full steam into FEED at the start of next year. And as I said, a lot of news flow to come during the course or from now through to the end of 25 when we are targeting to reach a final investment decision.
Very good. And if you're a betting man, which I'm sure you're not, Ben, but this final investment decision is likely to be a thumbs up or a thumbs down?
Well, I think we've got a unique project for the UK energy transition. This is a integrated energy solution. It's going to be effectively the UK's largest energy storage facility, and it's got a critical role to play in the UK's energy transition to provide reliable and decarbonised energy supply into the UK. So we think we're call it an early mover in what is going to be a multi-billion-dollar space in the energy storage sector.
So that's a big fat yes then.
Absolutely, yes.
Okay. So, I mean, really does solve two problems, obviously. First of all, you're going to have short-term gas production for a few years, and then subsequently, obviously, then able to store gas when it can be purchased at a good price and then used when required. How many other places in and around where you are could this be done with, if you like? So in other words, we're talking about Marram. How many projects within that facility are there?
There are other geological storage features in the area that we're also looking at and targeting. So there is extensive growth potential that we've identified over and above the Marram Energy Storage Hub feature. So we're very much looking to build on this on the MESH project.
Yeah, so I suppose what I'm looking at, this isn't just a one-off. Let's do this project and then not worry about going any bigger. The potential here in I think it's the Irish Sea there is pretty huge, no, in terms of what has already been taken out in terms of gas.
We've identified effectively we can treble the size of the mesh storage facility, looking at identified from other geostorage features in the area. And what makes this area effectively unique is its relative proximity to markets, so northwest of England, industrial areas, high population centres. It's adjacent to one of the UK's largest wind generating capacity areas with 7 to 8 gigawatts of power, which we are integrating into, and the existence of late life gas infrastructure that we are looking to repurpose to bring this new energy supply into the UK market.
And you look at the size of the facility there, Ben, as well, that, your aim is to store something like 50 billion cubic feet of gas, which is obviously is I think is comparable in size to the existing rough infrastructure. Just give the listeners an idea of how much, how big that storage facility is going to be.
Well, that's spot on. So this is what we're developing here is equivalent size to rough, so 50 billion cubic feet of gas, or 500 million therms. And with the nature of the reservoirs that we are utilizing here for the storage facility, we're looking up to deliverability or withdrawal rates from storage up to 200 million cubic feet a day. And that's excellent deliverability for a storage reservoir. And we believe we can develop this facility in a cost-effective manner from a capital point of view, and it can be run with relatively low operating costs too.
So Ben, a question for you, and I might sound stupid asking it, but the wind power, okay? Sometimes, obviously, the wind really does blow, and it blows too much and creates too much electricity for the grid. Is there any way of taking that electricity and storing it when it's not being used?
Yeah, and that's where the short answer is yes. For the UK, a key pillar of the UK's energy transition is a massive expansion of renewable wind generating capacity, currently approximately 30 gigawatts and targeted to increase threefold to 90 gigawatts by 2030. And really that increased wind capacity is going to struggle to get into the market when the wind is blowing due to limitations on demand, limitations in the transmission network. And so this is where hydrogen has an important role to play to harness that excess wind energy. And part of our plans with the MESH project is to harness some of that excess wind energy in the form of hydrogen storage. And that's going to be a key enabler for the UK in its transition to net zero.
You can maybe explain another day how that all works, but it sounds very interesting. It looks like the economics of this project are going to stack up in many ways because you've got many different ways of creating the revenue. So again, congratulations on getting the loan, and yeah, that's onwards and upwards in terms of getting to this final investment decision.
Okay, thank you very much. Appreciate it.
On that note, we'll say Ben Clube, CEO of EnergyPathways, thanks very much for appearing on the podcast.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.